Let me record from my end here. I know someone who went into crypto by just by luck like that, and they've made a lot of money by buying few coins, and the everyone around them thought that that's how you become millionaires with crypto. Just get into it. So by the time people are coming into crypto, it's already the summer. Right? So what happened after the summer is the autumn, and then there is the winter. You see people losing money left and right. And the worst part of it is that they now get discouraged about the crypto market. They now get discouraged about some of them will say, oh, you know, crypto is a scam. I'm not going to get in there no more because I lost all my money. You lost all your money because you didn't know what you were doing. So I'm going to show something to you. It's a graph, so you guys can see a little bit what does it mean. Summer, winter, spring, autumn. I'm not sure, Anna, if you guys looked into this. Let me know if you did. If you did, then I'll not show it.
No, we didn't go on TradingView today.
Okay, good. So this is just a picture. I don't even know where the other one is, but this is just a picture. Let me see here if I can find something. Let's see. Okay, let me show this one to you. If you look at the market, it looks something like this always. It starts down here. This is the winter. It starts going up. This is the spring. Then it's going to get to a certain point here. This is summer. At some point, it's going to start coming back down here. This is the autumn. Then it just fall down. It's always like that. So we call it winter, spring, summer, autumn, and then winter again. So it's very important to know where you are standing when you're getting to the market. Are you here in the winter? Are you here in the autumn? Are you standing here in the summer? Are you in the spring? Are you in the winter down here? So you have to know where you stand. That will help you now to make decisions based on the position that you are at. A lot of people don't know this. They don't even take this into account. They just get into crypto because everyone is not talking about crypto. By the time everyone is talking about crypto, we are here. You guys will see this. All of you guys, Lucy, Esther, Ambrose, Jackie, you see that when you guys started with Zukuli, we were somewhere down here in the winter. And you will see that the market is starting to go a little bit up again. Observe this, and you will tell me a few months from now. So you have your friends that were in project with you. You guys certainly lost money together. Some of them was like, we don't want to hear anything no more about that market. You will see them coming back to you. As this market is going to start going up, you see them calling you to be like, hey, Ambrose, that training that you talked to me about, tell me a little bit more about it. People are going to start getting interested again when the market starts going up. Now, everyone will be talking about crypto all over the place, and you'll see people calling you to be like, hey, I heard that you did that training. Tell me about that training. Can you shoot something to me? That's what happens with the crypto world. So it's important to understand this even before even getting to the market. If you're already in the market, try to figure out where you are already. So I just want to share this with you before we actually go looking into all the technical analysis tool that you will be seeing. So when it comes to technical analysis tool, I want us to make a connection between these tools here, what we've seen so far and what we're going to be seeing. So we're not going to get too technical with it because we're going to start doing it next week. We're going to go technical next week, getting into the system. But I just wanted you guys to have an idea of what is to be looking into when you are in the market, and to see what is it that you already have from all the courses that we've done so far till now. What is it that you already have that you can connect the dot already I heard Missy asking you guys a question about your wallet. Are you able to manipulate crypto? Are you able to move from one wallet to another? Those things are very, very important. Now, when it comes to the cycle of the market, you have what I would call the qualitative signs. So we talked about regulations, we talked about maybe healthcare situations, we talked about trader using too much leverages, all those things that you saw with Anna, they're valid. It's good to look into them. But now that you're in and you're using your technical analysis tools, and as you'll be looking already at it, what are you using? So technical analysis tool can be used to predict the start of a bear market. So when we are, let's say we are in a summer and we start seeing some signs technically, what are the tools that can help you? Because you already saw the sign qualitatively, now you're looking at the technical signs. What are the tools that can help you? So the RSI would help you to spot if we are getting down in the market, because the RSI will show you the direction that the market is taking. At least it will give you an idea of the direction that the market is taking. Is the market going up, or is the market going down? So there's some signs that when you see them with the RSI, you will see that, oh, this means that the market is going down. There are chances that we might be heading to a down market right now. So here they say that if you see the indicator crosses 30 on RSI chart, it's a bullish sign. When it crosses 70, it's a bearish sign. So the bearish sign is that we are heading downwards with the market. So we are going to look into RSI next week. We're going to see how you plot it into your graph, how you read it, and how you take advantage of it, whether it is just to see the direction of the market or just to use it as a trading tool. So during a downtrend or bear market, the RSI tends to stay between 10 and to 60 range, with a 50 to 60 zone acting as resistance. So we're also going to see the support and resistance. That we'll see it next week, because it's very important as a tool to be trading with. So they say here that these ranges will vary depending on RSI settings and the strength of the securities or market underlying trend. So depending on the whole trend of the market, you'll be able to analyze the market with RSI and to see if we are getting out of the high market, if you're heading to the low market, the bear market. So that's how you use RSI. Then after that, you have the moving averages. So all of those are technical indicators. Whether it's RSI, whether it's moving averages, Bollinger Bands. These are technical indicators that you use when you are in the crypto markets and you're starting to use technical analysis tools. So we're going to ensure that we break it down for you so that it doesn't seem too far away from you. I know that most people are usually intimidated by technical analysis, but the way we're going to present it to you guys is going to be broken down in a step-by-step approach so that you can actually use it and you can make sense of it. Unfortunately, people that teach technical analysis usually make it like it's so far away from reality that you can't even get it. So moving averages are also very powerful. So when it comes to moving averages, the moving averages are the averages of the price for the last few weeks. So it can be the last 9 weeks, the last 20 weeks, the last 50 weeks, the last 100 weeks, or the last 200 weeks. So there is certain position that the moving averages line should be at that will tell you what the direction of the market is, generally speaking. So if you have, for example, the moving average 200, which is above the moving averages 100, it means that you are heading down in the market. So like I said, we're going to see this practically. So there are those signs that you can already see, like, oh, when you're looking at the market to know where are we at right now? Are we going up? Are we going down? For example, if you look at the market, the moving averages right now in the market, they will tell you that we are not in an uptrend yet. But you're saying that the market is showing to you that the price is going up, but we're not in an uptrend yet. So with that, you can see what is coming next with the moving averages. So the Bollinger Bands are same thing. Bollinger Bands are more a volatility indicator, but they also show you the volatility during the bear market is not the same as the one during the summer. So you're going to start seeing some signs using the Bollinger Bands to know, oh, this now we are heading to the bear market. And the trend line and the trend identifications are just lines that are used, first of all, to show the direction that the market is taking. That one are obvious. You just have to plot them on the graph to see how the market is moving. But also, thanks to the trend line, you can also put your support and resistance on your graph. So they actually help you there to put your support and resistance, to put your channels on your graph, and this gives you a good direction of where the market is going. So those are the tools that you'll use when you are trying to figure out, are we heading to the bear market? Are we still in the bull market? What is the direction that the market is taking? With that information now, you'll be able to take a certain number of decisions like we've seen before. So now during the bear market itself, so this one was how do you spot that the bear market is starting? This one now is the middle one is during the bear market. What do you use? You use the same tools. You use the trend lines to spot the support and resistance to spot if the market is going up or down. You use the moving averages, technical indicators. There are many of them. And you use the chart analysis. So chart analysis is to show you if you have this type of picture in the chart, this is what it means. If you have this type of picture, this is what it means. So chart analysis will actually help you. It's pure graph. Like it sees what's on the graph and it's telling you from this what you're seeing, this is what will be expected next. Then because the whole idea of trading and technical analysis is to spot the direction that the market is taking, which is usually very challenging. Mainly during the bear market. During the bull market, we are all crypto pros and experts. Like you put $100, you come back tomorrow, it's $120. You're like, man, I made it. I am now a full-blown trader. We can go around and say to people, listen, I'm a crypto trader. Just up until the bear market comes, now it becomes a little bit challenging. So the idea here is that you've been able to navigate throughout the bear market and still be able to continue to work in the market. And then now the technical analysis tool that you use to spot the end of the bear market, you use the moving averages, you use the RSI. So the same way the moving averages and the RSIs are giving you the direction when the bear market is starting, is the same way they give direction if the bear market is ending. Like, are we out of the water? Are we seeing some level of positivity? So the moving averages and the RSI will also show that to you. So those are technical indicators that we'll be looking into next week, like practically, to see how they work and to see what are we looking at for those indicators to understand the direction the market is taking. So this here was the departmentalizing of tools, the tools that you're going to be using. So you guys saw the social tools, you saw the economical tools, you saw the news tool, now you're seeing the technical tools. So all of this should be in your toolbox. I heard Missy talking to you guys about systemizing your tools, what you're using, putting the numbers in place, having a system in place. The challenge that I see with people that are learning to trade crypto or to invest in crypto is that we are too in a hurry. I don't know, Ambrose, if you remember, when we started talking, I was telling you, don't be in a hurry. This thing is a long-term project. It's true that we lost money, we want to make money, but if it's taking a doctor 7 to 15 years to become an expert, to make the amount of money that is making, how do we expect ourselves to have a 6 weeks straight training and become experts and make big money? It doesn't work like that, right? It's just to have all those tools and to learn how to put the tools together. That's how you become better. And there's something that we have to remember when we're in the market is that the money that we make in the market is someone else's money. It's just that we've learned we are better than them and managing information. We are better than them understanding the market. And when we lose money in the market, it means that someone else took our money. They were better than us in managing information. So imagine then you heading to the market with no knowledge whatsoever. You're going to be eaten. So you wonder why people now are complaining how they lost money in the market. They lost money in the market because you didn't know what you were doing. You're competing with professionals. And we're talking about crypto and the big players coming. The big players are already in crypto. So you're competing with people that their job day and night is to analyze the market and to make decisions. They have teams. They have a research team. They have an analytics teams. They have news team. They have all type of teams just to make the decision in playing the market. So you have to become all those teams by yourself, like creating your small system, understanding how you're using the tools so you're making decisions. That's the only way you win the market. But if you do it well, you definitely win in the market. So those are the technical analysis tools. I just want to make sure that no one is sleeping. Lucy, the bear market, how to predict the start of the bear market. Just give me one tool in how to predict the beginning of the bear market.
I believe the sentiments out there are a bit negative. We have layoffs. There's the inflation happening. There's a lot of selling of assets. People are not, the buying isn't as much.
So give me one technical tool that I can use to spot that.
One technical tool? I'm
Yeah.
not so sure.
Oh, Lucy, I'm not so happy. Those nice technical tools were in the notes, sweetly written.
I think I've lost. Oh my.
I'm not happy.
Okay, just look at my screen, Lucy, and read.
Well, that was the longest topic I have ever read.
That is, you see how long it was?
Yes.
That is the deepest place where people lose a lot of money. So that's why it was the longest, right?
Oh yeah.
Because people have lost billions there, and that's a lot of money. So it means that, and more will be added. It means that we have to keep on finding solutions, and it will keep on getting longer and longer. So, yeah.
Okay, so we say RSI, right? We say RSI, relative strength index. So that's a technical tool that could be used to spot the beginning of the bear market. So now I'm going to give the floor to Esther. So you guys know that I'm coming for you, Ambrose and Jackie. Esther, give me one tool one technical tool that could be used during the bear market to navigate the bear market. What technical tool?
the bear market, the moving average.
The moving average. Yeah. The moving average can be used. It's a technical indicator that could be used during the bear market to help you trade during the bear market. So I'm going to give the floor to Sir Ambrose. So Jackie, you're getting ready. Sir Ambrose, give me a tool that could help me to spot the start of the bear market.
So we can talk about trend analysis.
Trend analysis, yeah, trend lines and trend identification could help us to spot the bear market. That's the easiest way actually to spot that we are consistently going downward with the trend lines. Okay, Jackie, give me a tool that will help me to spot the end of the bear market.
Bollinger Band?
The Bollinger Bands. No, the end of the bear market.
End of the bear market.
Please, I have to beg you all, even if it's just reading the bear market again, I want you to soak it in. I want you to don't just read it, take notes. This is where a lot of people die in the crypto market. You don't want to die there. Please go back there again before you're taking the technical analysis class next week. This session is running to an end. After this, it means we're having just 1 week left to finish with the session. And when you're coming to write your final exams, right, the practical session, we really have to make sure that you now have mastered this particular area itself. So a lot of things will be given based on this bear market, because a lot of people are actually losing money here. So take it seriously.
Yeah, so Jackie, we have the RSI, we have the simple moving average. Those are some technical tools that we can use to spot the end of the bear market. Esther has a question. Yes, Esther, go ahead.
Okay, maybe you will learn that. But when you're using the simple moving average, let's say 200 week, because that would mean that I'm failing to explain myself. Which period are you looking at? Are you looking at over is it the 1 week, the month, the monthly, the weekly, or which time frame?
The time frame will be okay. The time frame will be daily. For if you're looking at to spot the beginning or the end of the bear market, you're going to use a daily time frame. But the moving averages comes in weeks. So if you see moving average 9, it means that 9 weeks. If you see moving average 20, it means 20 weeks. If you see moving average 50, it means 50 weeks. Moving average 100 is 100 weeks. Moving average 200, 200 weeks. But the optimal way to use moving averages will be in a daily periods. But you can use them in a 1 hour period, 4 hour period, in a 9 minute period. But the optimal way to use moving average is going to be a daily period. But here to spot the end or the beginning of the bear market, you are going to put it on a daily period. All right. So now that we've seen this, like I say, next week we're going to do more practical hands-on on these technical analysis tools and other technical indicators of the technical analysis. Now let's look at the investment strategy planning. So we talked about the mistakes that are done. We talked about the opportunities in the market. We talked about how to get ready for each season. And then we talked about the technical analysis tools to spot the beginning, the end of the season. We'll focus, most of the time here, we'll focus on the summer season and the winter season, because the spring and the autumn, they kind of blend into the bigger season. So if you look at the summer season, when you are heading to the winter season, it's blend to the autumn, because it goes down, it goes up again, then it goes down, then it goes up again, it goes down, it goes up again, up until it reach the downtrend down there in the winter. So they kind of blend. The spring is moving along and getting you to the summer, but you can already see like the weather is nice, right? Like what we're living now, we see for a few days, the market goes up, the market goes up. And if it continues like this, it's going to go up. Yes, it's going to come back down. It's going to go up, come back down. We're going to start observing to see when it goes up, how up does it go? When it goes down, how down does it go? If we see going up, then going down shorter than how it went up, then it goes up again more than the up before, and it goes down again shorter than how it goes up, then you know that, oh, we're heading there. We're heading to the summer. So those are blended. That's why we're taking the time to talk more about even mainly the winter season, because the summer season is, everyone is chill. People are not losing that much money. It's just that if you're not smart during the summer season, you might not even make money, because it keeps going up and up and up. And if you're not sure if you have to get in, if you have to wait, you might not be making that much money. But most of the money is going to be made when you get yourself ready during the winter. And if you know how to navigate through the winter, then now you know that, oh, we are now in the winter, I have to start getting ready for the summer.
They have to really master how to recuperate their profits in the summer, because that's what a lot of people face. They don't know how to take out profits.
Yeah, that's what Ada was saying, right? That most of us, we didn't take profit. If you look at our portfolio, all of us from the Zukuli crew, the thought process was that, okay, whether I'm working long-term, which is true, but the human nature is such a way that it's difficult to bear the market that is running down, and you see your wealth running down. Like you see $1,000. So in your head, you're doing the math. I have $1,000. Just for you to wake up one morning, it's $200. It's a wake-up call. So you have to be able to take your profit, like Izzy was saying. The question now becomes, how do you take your profits? Those are the ways that we'll be looking into this page here. So number one, portfolio reorganization, because when you are already in the summer, is to decide, okay, if I have my asset, like the list that we have here on the screen, we have Bitcoin, Dogecoin, Shiba Inu, Ethereum, Osmosis, Aave, Polkadot, Cakes, Push Protocol, BNB, Aptos. You have these coins in your portfolio. How do I work with those coins? How do I work with these projects? What do I buy? What do I sell? How do I reallocate my assets? How do I reallocate my funds? You have to be able to do that. In order for you to be able to do that, of course, you have to be ready to sometimes get rid of some of those projects, some of those coins, to buy other coins. So this comes also to how much research are you doing in the market to take advantage of the newest projects that are coming. That's number one. Number two now is that if you have this in your portfolio and you see the market starts running down, what do you save first? Like I have Bitcoin, Dogecoin, Shiba, Ethereum, Osmosis, Aave, Polkadot, Cakes, Push, BNB, Aptos. What do I save first? I will start by saving the Dogecoin and the Shiba Inu, because those are meme coins. Those are shit coins. So they are going to run down very quick. While the other big players like Bitcoin, Ethereum, they will run down, but not as quick and as fast as the less valuable coin. So the way you're going to protect your asset, the way you're going to protect your money, is by selling first the coins that are not solid. those with no utility. That's what you sell first. Then now you sell the other level is going to be here, AVI, push protocol, Polkadot. Then you sell those. Then now you're going to sell Aptos. Then you're going to sell Osmosis. And after that, you have left Bitcoin, Ethereum, and BNB. Those are the ones that you're going to sell at last because they don't go down as fast as the other ones. So it's something that you have to know when you're managing your portfolio and your assets are running down. So that is that you have to know how to reorganize your portfolio. And I heard Anna saying here, sometimes it's wise that even if you have that asset that you want to keep for the long run, if you see that you're at the all-time high of that asset, sell it. Keep the cash aside and wait. It's going to go back down. So we said this, you hear us saying this, most of us that started the journey with Zocoli, because in our minds that it was like, okay, I'm going to just let it go. Like people who left the, I don't even know how many people were able to leave their Bitcoin go, because if you look at Bitcoin, it started, what, 0.1, then $4, then $10, $15, 20, 100, 200, 1,000. Sometimes Bitcoin went to 1,000, then went back down to 200. How much are you able to keep that? And you don't know if the future will bring Bitcoin to 60,000. So you have to be able to see, when you say all-time high, and that might be the trigger for you. If you look at the coins, oh, what was the last all-time high? Is this the next all-time high? If you see your coin get to an all-time high, sell it. At least sell half of it. Observe. If it starts going down, you sell another half of it. Up until it goes down, now you can buy again. So that's something that you have to do. You have to be now dynamic in the market. That's why we talk also about the fact that you have to be able to buy and sell. You have to be able to manipulate your crypto assets in the market. You have to be able to know how to buy, how to sell, because some of those coins, you might not have them in a centralized exchange. So you have to be able to move them from one blockchain to another. If you have Osmosis, for example, in your Kepler, are you able to sell from Osmosis? If you sell from Osmosis, are you able to keep that money and then wait and then buy again? So those are the questions that you have to be able to answer. That's that you have to be able to do. Just know that you have to reorganize your portfolio. Now, there are a few things that we're looking into. Strategy, how to collect your profit. So collecting the profit is one of the most challenging things to do when you're in the crypto market. Number one, it's good to see that money when the value is going up. But as a human being, you're always thinking that it's going to continue to go up. So let me wait a little bit more. I want to make some more. So what you have to know is that if you get to a certain threshold, don't hesitate, sell. It's okay if the coin goes up again. It's okay, that's okay. But sell first, at least you protect your capital. So here we say, take out your capital. That's the first one, take out your capital. So take out your capital means that if you got into a position, like you bought a coin, like let's say you bought Bitcoin, let's say 2 weeks ago, I bought Bitcoin, 70,900. You guys remember when we were doing our project here, Bitcoin was 16,000, 17,000. So let's imagine that you bought Bitcoin, that you were keeping that Bitcoin for the long run. Bitcoin today is at 24,000. So talking about a nice gain there. You may want to take out your $100 that you bought for. So that's what I mean, take your capital out. So if you bought for 100 and now you look at your portfolio, you see, oh, I have $117. Sell for 100, the equivalent of 100, your Bitcoin. Sell the equivalent of 100 so that you take out your capital. You can leave the $17 in there. That's house money. If Bitcoin continues to go up, that's okay. Your $17 is going to become 18, 19, 20. But at least you took out your capital. Because it would be unfortunate if we woke up tomorrow and the market went down 30%. And that $70 that you won, you're now at $101. What was it for? That's why we talk about taking out your capital. So take out your capital means that you take out the money that you put in, and you can leave in now your gains. The other option would be to take out your gains. So if you see that the markets keep going up, up, up. So we started with Bitcoin at 16,900. Then it went to 19,000. You took the gains. Left the equivalent of 100 there, but you took the $4 that were there, you took them out. Then you continue to go up, you went to 21,000. You took again another $4, leave the 100. So you can say every time money goes above 100, maybe let's say I make $5 above 100, I'm taking out the $5. So right now you'll be sitting with the equivalent of $100, but you're taking out your gains. So you'll be sitting maybe with a $25 gain or a $27 gains. And the market keeps going up and up and up. So that's another way to do it. You take your gain out, you leave the capital. Many ones were in a bull run like this, where the market just keeps going up and up and up. You don't know where it's going to stop. But be sure it's going to stop. And be sure that you wake up one morning, the market going down 20%, 25%, maybe even 30%, as we're going like this. So another way to take out your profit is take out your gains. So the first one was take out your capital. So whatever you put in, take it out. You want to protect your capital at all costs, by the way. That's a rule from Warren Buffett. You want to protect your capital at all costs, because if you lose your capital, you can't do anything no more. Let's say you didn't have more money to add. Let's say, for example, Jackie is sitting here. She left work at 10 p.m. So at the end of the month, she's like, okay, I'm going to put 20% of my saving in crypto. Let's say that's, I don't know, let's say that's 2,000 Kenya shillings. She has to hold on those 2,000 Kenya shillings, not to lose them. That's what they say, keep your capital at all costs. It's better for you to still be with your 2,000 Kenya shillings than end up with 1,400 Kenya shillings. And when you see people getting frustrated and going discouraged because they came in with a capital, now look at the capital, the money has just evaporated. They came with 2,000 Kenya shillings, now they have 1,700 Kenya shillings, then they have 1,500, then they have 1,200. So she's like, no, this is not for me. I'm not going to stay here. So you have to know, you have to learn how to protect your capital. Now, the third option now is to just take out everything. You put it 100, you made $17 out of it, $170, you take it out, $170, then you start over. You make another $10, you take it out, $110, you start over. Now you have $127. Then $127, you buy again, you get another $5 or $6, now you have $133. You take it out again. So that's the third method, is that you are taking out your gains and your capital. So now, which option do you choose? It depends. It depends on the situation that you are at. If your thing is that I want to save my capital at all costs, then you're going to use it, take your capital. Now you leave there the gains. And that might be because, let's say you're trading, I don't know, you're trading Aptos, or you're trading, what is new here, push protocol. And you want to keep those assets because you know that the potential is still there. It's going to continue to grow. So you can afford to just buy like that, like leave the profit there. It's going to grow by itself. Because if you look at a coin like Aptos, it's still going to multiply at least by 3 or by 4 if you start doing the fundamental analysis of Aptos. So if you look at a coin like Cakes was at some point at $40. It has divided by 10. It means that if we go back to a bull run, Cake can come at least to $12. At least to $12. So now you're like, okay, I'm going to start trading Cake. Every time I make gains, I leave them there in Cakes. Because I'm hoping that when the bull market comes again, it can multiply by 2, by 3, or by 4. Then now that's when I'm going to take my gains. So those are the ways that you take your profits out of the market. Now, the other strategy is how do you grow your portfolio? So you have a portfolio, you have your assets. So you have your Bitcoin, your Ethereum, you have your BNB. You want to keep them for the long run. So you want to keep growing your asset. That one is, it goes hand in hand with the buying the dip one. Because what you're doing here is that you get into the market with $100 for Bitcoin. Then you buy Bitcoin for $100. When the value goes up, like let's say it becomes $110, you sell it. You can sell it all, you can sell, just sell your capital, wait for the price to come back again. When the price comes back again, you buy again, same amount. When you're buying same amount now, you have always one part that stays in your wallet. So that's how you grow your portfolio. So if you start with $100, by the time you're done with, at the end of the month, you might be ending up with $137 worth of BTC. Now, of course, if the price of BTC drop again from 33,000 to 22,000, you still have the same quantity, but the value had dropped. There, you're just looking at the quantity. And that's also what most of the people started doing during the winter that we just went through. And even till now, is that I'm not looking at the amount in dollar. I'm looking at the number of coins that I'm gathering. So I'm not looking at how much am I making, I'm looking at the number of coins, because I know that this coin has the potential to multiply. So I'm just going to be patient with it, but I'm keep adding the coins, keep adding the coins, keep adding the coins, keep adding the coins, keep adding the coins. So I started with maybe, let's say, about the cake, I started with 10 cakes, now I have 12 cakes. Now I have 14 cakes. But the price of the cake is down, it's like maybe $3. So in terms of dollar amount, I don't have much, but in terms of the quantity, I have more. I have 16 cakes. Then I have 18 cakes. I have now 20 cakes from the 10 cakes that I started with. So that's when we say increase your position. That's what you do, like just adding up what you're buying in terms of the quantity. And that's the approach you take during the winter. During the summer, you can look into the dollar amount, but during the winter, look into the quantity. Psychologically, it helps you. Because if you start looking at the dollar amount, it might be very challenging for you. Because I started with $10,000. Now it's just $6,000. Okay, I can be having $6,000 now, but I increase the amount of token that I have. So this is another way to prepare for the summer that is coming. And then we talked about buying the dip. Buying the dip is one of the most easy things to say, but the most difficult thing to do, if I can put it like that. Because the whole idea is that you have to buy low, sell high. Okay, you're trading buy low, sell high. Is it that simple? No, it's not simple.
No, it's not.
But you can do it actually if you're disciplined enough, if you're there in the market, setting up the alarms when the price goes down like 5%. We're talking about the portfolio managers tools. Like last time we saw Crypto Compare. And if you go to CoinMarketCap, you have the watch list on CoinMarketCap. Even CoinGecko has it. When you set that up, you put your coin there that you want to keep watching. You can set an alarm, and you're going to send you an alarm on your phone to be like, BTC just went down to 3%. Now you can be like, every time you receive the alarm that it went down to 3% or 4%, you buy it. When the alarm comes again that it went up to 3-4%, you sell it. So you just do buy, sell like that. That's another way to do buy the dip. But all the tools, the technical analysis tools that we are going to see, that we're going to be using, are based on the idea of buying the dip. And then dollar cost averaging is the easiest way if you're disciplined, because the idea here is that you don't care about the price. All you do, you care about the timeline. So if you say, okay, I'm going to dollar cost averaging for 2 years, every month you put $25. Every month you buy Bitcoin for $25. Every month Bitcoin is 30,000. $25. Bitcoin is $15,000, $25. Bitcoin is $70,000, $25. So you buy the same amount every month. So that's dollar cost averaging. Okay, so the strategy how to grow your capital here is, instead of now looking into the quantity of the asset that you have, you're looking at the amount. So let's say you put $100, you made $115. Now you do that, I have $115. Your goal now is to move from $115 to get to $120. Move from $120 to move to $125. So you're going to use the same tool that we used to do your portfolio, but this time you're going to focus on the dollar amount. So now, how to cut your losses. So I'm coming back to the example that Anna was talking to us about. When we reached the market, it was April 2021. We were buying cake at that time at $40. Cake right now is $3, $4. We're buying at $40. And we had the cakes, we had BTC, we had Ethereum, we had nice portfolios. Personally, I had a nice portfolio. I was feeling good about my portfolio, but I didn't put the stop losses. So when the market started going down, I had the mindset of keeping the quantity of my asset. I actually was able to buy some more assets, but just that psychologically is draining to see the value, the dollar amount of your money going down like that. And when the market is going down, you don't have cash no more. That's why now I have a rule. I always have cash. So when I call cash, I say USDT or BUSD. It doesn't matter what's happening with the market. I always have a chunk of cash somewhere so that if the market goes down, I don't feel useless. That's what happened to us. The market started going down and it went really down. Like you're seeing Ethereum at 900, but you don't have cash to buy Ethereum. And you know very well that it's going to go back up, but you don't have cash. So the idea here is that to put your stop limit, you can say, okay, I'm willing to lose 10% of my assets, but I'm taking my money out. So you can put a stop loss to be like, okay, if the market goes down 10%, sell, take USDT, and we're going to keep it. And that's actually the smart way to look at it, because if the market actually goes south and it's going really in the winter, it's better for you to have the 900. If let's say you had your asset were worth $1,000, it's better for you to have the 900. If the price is divided by 3 and you buy again for 900, you'll multiply your value by 3 actually, as opposed to staying there at 1,000, seeing it going down to 300, and you can't even do anything. So that's why the stop losses are very important. Place the limit orders. And if you're using the market, sell. When you reach your threshold, let's say 10%, you sell, and then you get out of there. So that's how you cut your losses. Very important to understand that. So we've seen so far how to collect your profits, how to grow your portfolio, how to grow your capital, how to cut your losses. Now, how to profit from the bear market. Now, profiting from the bear market, there's so many things that you can do. We talked about one of the best things to profit from the bear market is to focus on just researching to look at those projects. I think it was Missy that was saying about the fact that most of the biggest players, the best project came out during the winter season. So just research what is coming out, what are the trends, what's happening. Do your fundamental analysis, do your research, look at the new projects that are coming out. In that way, you get ready, you spot them, they're still cheap, now you buy them. You buy, you sit, you relax. So that's what you do when it comes to taking profit of the bear market. When we started Zukuli, Solana was maybe $5. Avalanche was, I don't know, $3. BNB was at $20, right? So the idea is now for you to spot those assets. And then as the market's going down, like it went down, if someone had cash, now you just come and you buy those. Even right now, Solana at $20 is still a big deal, it's still a good deal. Avalanche at $20 is still a good deal. If you look at Solana, Solana went up until $350. Okay. It's been said that they were pumped by FTX. Let's say that. Let's say they were pumped by FTX to, let's say, even $200. It means that Solana has the potential to go back to $150 from now. So right now, Solana is at $20. It can go at $150. Same thing for Avalanche. Same thing for Chainlink. Chainlink was at $35. Now it's at $7. So you're talking about times 5. So most of the assets that we're seeing now, they can multiply by 5, by 6, by 7. And if you look at the newest assets, they can even go further than that. There's a new one now, I think it's Lido. That one has a big potential to multiply again, maybe from here by 7, by 8. So the idea now is that to make this, to do those research, to have your watch list, and then when you have a little bit of money, you buy this, you buy this, you buy that. You can just manage your portfolio like that. Just keep buying as we're getting ready. Even if the market goes back down, all you do is that, okay, let me get, say I can get another $100. Buy again, just stack. And when the market will take off and will get to those all-time highs, just be singing. Just be singing, right? So that's what it's all about. That's what I had for you guys today. I don't know if you have any comments on all the material that we just shared with you now, like your portfolio management. Is there any experience that you guys have seen? Is this something that comes to your mind when it comes to staking your profit, growing your portfolio? Are there, as I'm talking, are there things that are coming to your mind that you wish that you'll be doing? Because now is the time to actually ponder on those things, think about them, and then start taking those decisions. So I will start with Esther. Esther, what comment do you have based on everything that I just said? Like, grow your portfolio, grow your capital, cutting your losses, taking advantage of the bear markets, or reorganizing your portfolio.
Now that when you mentioned about that when you should not hold on to your, or you should increase the number of coins maybe you have. Let's say I'm holding BTC and then the prices drop. So what percentage is the right percentage to say that now, if it drops by, is it the 3%? Then okay, you're talking about not just holding on to the cryptos, but you sell, and then when the prices come down, we buy.
So for me, it's 10%. Like if it falls like 10%, that's why I start looking to cut my losses, for example. So let's say that I have Bitcoin and I see the price dropping by 10%, 15%. I rather sell then and keep the cash and wait. Now, if it goes back down, so I can be like, okay, if the price goes down 10%, I'm selling. It might not be, it might be, okay, I might keep like Bitcoin, Ethereum, and BNB. I can give them until 20% before I sell. And the second tier coins like Chainlink, Avalanche, Matic, I can be like, if it goes down 10%, I sell and I keep the cash. And I just wait. If it goes down again, then I start buying with that cash. So it depends on the type of asset that you want to keep. It also depends on what is your time horizon. If you are like, okay, I'm playing this game, I'm good for 2 years, then you can be like, okay, if my time horizon is 2 years, I can let it down until 20%. If my time horizon is like 6 months, I can be like at 10%, I'm cutting to take that loss at 10%. Same thing when I'm drawing up my portfolio, I can be like, okay, every 5%, I'm adding up. So if it goes up 5%, I sell, and when it goes down again, I buy again. So it actually depends on the time horizon that you put and what are your goals that you want to meet. But for me personally, that's what I would do. I'll go 10%, 5%, 10%, 15%, 20%. Mm-hmm.
Now, the other question is, when you're looking at our portfolio, okay, there are those stable coins which I can see there's a lot of emphasis that we need to have at least the Bitcoin, the Ethereum, the BNB, and the likes in our portfolio. What would you recommend? Would you recommend that we have a portfolio of maybe 10 coins or so? Or how many coins would you recommend for us to keep in our portfolio?
Okay, so the number of coin will be linked to your budget. So if you have $20, if you have $1,000 and you're getting to the market today with $1,000, you can have 20 coins. You can be like, okay, I have $1,000. I'm buying $50 worth of coins. Now, of course, it depends on how much research you've done for those coins. So if you have 1,000, you can have 20 coins, $50 per coin. Yeah. All right. Ambrose?
Oui, monsieur.
Yes. What does this inspire you?
Écoutez. I'm listening.
Yeah, like we talked about strategies how to collect your profits, strategies how to grow your portfolio, strategy how to grow your capital, how to cut your losses, how to take profit of the bear market. Like from that, does that raise some questions in your mind or some comments in your mind? If that's the case, what are those questions? What are those comments?
Actually, thanks so much, Richard and Co and Miss BK. Well, my comment is in every area that we have discussed tonight is important to make an observation there from when we started with Anna. It's very important to know where we are in the market. The very first question by Anna was together with Miss PK is, now that we are in spring, what are we supposed to do? Okay, so it's critical to know where we are in the market so that we can make sound decisions relevant to the position of the market.
Mm-hmm.
That will enhance our overall profitability or progression in the market. And of course, Miss PK came out strongly in admonishing us on the need to plan. Or if we don't plan, we are planning to fail. There has to be need for us to have data to back our ambition in whatever we want to do. Now, of course, what we see in the crypto space is that it could be as a movie if you don't have money to act. Referenced, as you have said, that there are some times when Ethereum was dropping down to 900 and you just gaze at it you can't be able to act. But more importantly, is that we must have the technical knowledge. Many of us, actually, we are newbies, as I would say. Many of us stumbled onto this space, and we didn't know. Whatever you said there is that, I mean, it was very practical on us that we were seeing things rising, or we are very excited. We have done some $10 or $20.
Oh, we lost Ambrose. Huh?
It seems so.
We lost Ambrose. Okay. Waiting for Ambrose to come back. Lucy, do you have any comments? Any thoughts?
No, I don't. In fact, my only whatever challenge although when I read, I realized that hodling has the most benefits. So I'm just imagining when you now start buying, when they are low, and now the waiting period. That's where my challenge is. A month, 2 months, 3 months. It's not easy.
Yeah, is that we don't have control over it, right? We don't have control over it. If you look at the historical data,
Yes.
you're talking about sometimes the winter might last 1 month, sometimes it might last 2 months, sometimes it might last 6 months, sometimes it might last 8 months. So we don't actually have control over it, and we don't have control over the state of the economy of the world, or the state of of affairs in the market. Like last year in June, no one was expecting a Luna to go down. We woke up one day and it was going down. This year last year in November, no one was expecting FTX to go down. We woke up one morning, FTX was going down. So we cannot time in terms of time. We don't know how long it's going to take. We just know that we have to be, as investors, we play the game of time. Just have to be ready. Now, the longer is the winter pass, the more research we're going to do. Now, just okay. The challenge now become, okay, would I have the capital now to buy those assets? So that's also going to help you to now start optimizing the small capital that you have. You can do a better job at optimizing it when you're diversifying your portfolio.
You've made a lot of sense, and especially Ms. Piquet, she had told us you must document what your portfolio, everything about your portfolio. So I realize that's where you'll now be checking up on it. Otherwise, you one day wake up and there's nothing to look at.
Yeah.
So it's important to keep monitoring.
Yeah, it's very important to keep monitoring. I also give you a sense of this coin is not performing well. Maybe I should replace it by another one. Don't be afraid to do that. If you see this one not performing well, I've been looking at this thing for the last 6 months. We went through some ups and downs, but when I look at my portfolio, still not performing well. I'm not keeping it. Let me look for something else that I have in my watch list that I think might be performing better. And then that's how you move your assets around.
Okay.
Yeah.
Thank
Okay. So before Ambrose takes the floor again, Jackie, do you have any comments? Any thoughts? Jackie?
I just had one question. There are coins that when you buy and leave them in a wallet, especially Pancake Swap, or is it Trust Wallet, they keep growing in value. You put in 100 coins, they keep growing. Maybe in a month's time there'll be 110. What kind of coin? What kind of process is that, or what do you call that?
That's staking.
No, that's not staking.
No, you know, if you leave your money in your account, it will grow, right? Remember, if you leave a coin and the market is going up, that coin too is also going to grow in value. But the only difference is that you're keeping in a hot wallet, right? But your coin will grow in value. If that coin is doing well in the market, when you come back, it will be different. That's what is hodling, right? Hodling, that's so you put your money in your account and you leave it there and it grows over time in value.
I had an experience with one coin called Saitama, and we left it in the trust wallet, but it kept multiplying.
The amount of coin, not the amount of money, the quantity of coins.
Yeah, it's the coins. Yeah, if you started with 9 million coins, after a year there may be 10 million, 11 million. So I was just wondering what kind of what's that? Yeah.
It might have been airdrops, like they're distributing more coins to those who are already holding them. That would be airdrops. If the amount of your coins are growing and you're doing nothing, it means that those are airdrops. Means that they say, okay, the people that have this amount of coin, we're going to give them some more. Those are airdrops. For the number of coins to grow like that, it means that it's an airdrop. For you doing nothing, it's an airdrop.
Oh, okay. Yeah, because it's a question I've been wanting to ask. I didn't understand why.
Yeah.
Yeah. The other thing is there's so much in this, in the whole course. And at times I just have to sit down and then go through and over, because when you start class, by the time you're halfway or beyond halfway is when I'm settling down. So at times I sit down and listen, because at times it's just a long day for me. So right now I may not say much.
Okay.
I'm just wondering, last week's lesson, has it been uploaded?
I think it has been. It didn't?
By the end of the week, it wasn't there.
Okay. Let me double check. I think we uploaded everything, but let me double check just to make sure that they are visible to you guys. But I believe we uploaded them. So, this one, as soon as we're done with this one, we're going to upload it as well.
Okay, thank you.
All right. So we made it to the end of the lesson. Of course, our lesson always lasts longer than we wish them to, but it's like we said last week, like the material is so important that we can't do any other way unless we push the time, like to add some more weeks, which we don't actually have the luxury to. But the most important thing for us is to provide you guys with the tools that will allow you to navigate the market in the right way and knowing what you're doing. And as always, the chat is available, the WhatsApp is available. If you have a question that comes to your mind, even when you're reading and you have a question, type your question on WhatsApp, and then we'll be happy to answer. Of course, you can also take an appointment to come to the office and to meet us. It's true that the time is usually challenging, but we always work it out. Mr. Arnold, did you have any last comment before we allow we finish the session?
I have just one last comment. Please go back and reread this module, especially the winter season. And as you are going through the technical tools, Esther, you've been waiting for this moment. You always wanted to trade and know your tools. And I'm also inviting Jackie and Lucy I talked with you both, and I said it's going to be easier for you to understand the process, but I want you to be aligning it with the market, right? Because I want you to look at it this way, that if you wake up from sleep and they were telling you that, oh my God, we are going into the bear market, it's just like you're preparing to go to a war front. You won't have to think. The first thing that comes to mind is, okay, if I'm going to the bear market, oh my God, what tool should I use to dictate where the market is going? Okay, moving averages. Okay, it needs to be at what number? Okay, it needs to be at below 200. Okay, if I have to know where the direction is going, what else can I use? All those things, you should be able to already know it in your mind. So know that, okay, I need this for the bear market at this point in time and for this reason, and I need this for the bull market at this point in time for this reason. In that way, it's the same way like I told you before. The idea is to departmentalize your material and to systemize it in such a way that even if they wake you up from sleep or at any point in time, you'll be able to say exactly what you'll be doing, so that when you're talking crypto with somebody, they will know that you don't just know it from the news. You can, simplify the things for even a child to actually understand. So get in there and try to connect the dots. Don't just do it. Ask yourself, why am I using this tool? Okay, why am I using it and how does it align with the other tools? What is the impact? How are both working together? And when you start to align things like that, you'll be like, okay, wait a minute, because that's the same way my thought process functions. I'm like, okay, what can happen to break down a company? What can happen to break down a crypto? If people are not coming in, what happens? If this happens, what does it trigger next? And if it triggers that, what happens after that? So by the time my thought process starts to go round the clock, by the time it comes back, you'll be like, okay, wait a minute, go back and go and study this. Go back, read that, go back, read that. And by the time you come back right now, you have a different view and outcome with what you're looking for. So I invite you all again to have your database, have your create a spreadsheet. And you can even put all the modules there. All the modules, the different modules we taught. Put a place that is for research links so that you can always go to research. Put a place where if you know that, okay, this is your go-to place if you need to find this. And if you read something and it doesn't make sense, write it down. So that by the time you go back to redo it, you will see it there. If you understand, also write it down. In that way, you start to create a process and a system in a way that you don't forget. I forget a lot. So I turn to restructure the stuff so that I am able to understand. Just like Lucy said that it was the longest chapter I've ever read. Did you ask yourself, why is it that it's the longest? Because that's the way I go about it. If it's the longest, it means that there's a story behind it. Why is it that it's the longest? It's the longest because the most difficult journeys are not traveled by everyone. And sometimes, maybe some people don't even know that it was the longest because they didn't even get to read it. So if you got to read it till the bottom and you get the idea, and you can wake up tomorrow and you're talking to another person, especially Esther, those your friends that were scared or are scared to join, you can hold a Zoom meeting one day and you talk to them only about the crypto market cycle, and they will leave differently. You're not asking them to invest, but you are now being an advocate, because this is the information you're learning here will impact people out of just the investment ecosystem. So as you're talking, the best way for you to remember your stuff is get people who are not believers in crypto and tell them that I've learned a thing or two that I can share with you. Just like that, you will see that you will start to become a voice in your community. Most things are not always about money. Even the passion we put into this, we are looking first about changing lives. When you change a life, it's one sole gain, because I know that if you leave this class with this knowledge in mind, I know you're going to change the lives of all the people. And it becomes now something which is much more bigger than the money that we can see or touch. So add in some passion into this and let's get it done. Thank you. I'll see you tomorrow. Tomorrow is going to be a little bit of an exams and a little bit of a practical session that we are going to do. So thank you.
Thank you, Missy. Thank you, everyone. Good night. See you tomorrow.
Thank you, Richard.
Tomorrow at what time?
Tomorrow is noon,
8.
right?
Yeah, tomorrow
Yes,
is
noon
8.
for us, 8 for you guys. Yes, tomorrow we start earlier. So, yeah. Okay.
Bye.
Okay.
Bye,
Bye.
Richard. Bye,
Bye-bye.
Miss
Bye-bye, Lucy.
Bye.
Jackie, Esther, Ambrose.
Bye.
Good
Cheers.
night. Bye-bye.